We are trained to see markets as a numbers game. Charts, ratios, price targets. This is a fundamental error. Markets are not number processors. They are story processors. They allocate capital not to the most efficient asset, but to the most compelling narrative. And right now, we are witnessing something rare, the climax of a story that has dominated for a generation. The final act is not a price move. It is a plot twist. For over a decade, one narrative has held the top spot, the dematerialized future. Its protagonists are digital, virtual, and scalable to infinity. Its plot is one of endless growth through abstraction. But a narrative reaches peak dominance not when everyone believes it, but when no one can conceive of an alternative. That is the point of maximum fragility. The signal of decay is not the hero faltering. It is the rise of a character from a completely different genre. When an asset representing the old world, the physical, the tangible, the elemental, begins to outperform the darlings of the new, the story itself is being challenged. This is not a sector rotation. It is a regime change. When belief shifts, capital does not move gently. It floods. Consider the mechanics. The entrenched narrative, like the technology sector, is a vast reservoir. Trillions in capital, high liquidity. The challenging narrative, physical commodities, critical infrastructure, is a narrow channel. The moment a crack forms in the dam of belief, a reallocation of just 1% from the reservoir creates a tidal wave in the channel. The price explosion in the new asset is not a measure of its own quality. It is a measure of the scale of capital leaving the old story. This is the rotational engine, a chaotic exponential rush from high liquidity to low liquidity, driven by a change in a single variable, the prevailing story. This creates a psychological trap. As the new asset rises, our trained response is to call it expensive. This is a failure of measurement. You are measuring it in currency terms, a denominator that is itself part of the narrative in decay. To see true value, you must change the denominator. Measure the asset not in dollars, but in what dollars can buy. Barrels of oil, tons of wheat, hours of skilled labor. Measure it against other real things. When you do this, a different chart emerges. It often shows an asset that has been suppressed for a decade, not by its own fundamentals, but by the overwhelming gravitational pull of the dominant digital narrative. Its rise is not a spike. It is a recalibration to a more stable measure of reality. As an investor, your goal in a narrative war is not to be a hero in either story. It is to be the architect at the pivot point. The greatest risk is total allegiance to a dying plot. The strategic position is to own the infrastructure of the transition itself. These are the enterprises that enable the shift from one paradigm to another: the energy producers, the logistical networks, the security platforms. While protagonists battle for the narrative crown, these entities profit from the movement of the battle itself. Your capital should be positioned not at the destination of either story, but in the engine room powering the change in direction. Your portfolio is not a collection of tickers. It is a physical manifesto of your subconscious economic beliefs. Here is the diagnostic. Look at your 3 largest holdings. For each, ask this question: does its fundamental value depend on the continued, unquestioned belief in a dematerialized future of infinite digital growth? Or does its value rest on an immutable physical claim in the material world? The ratio of your answers reveals your exposure not to market volatility, but to narrative extinction. The most critical asset you manage is your own ability to detach from a compelling but concluding story. Rebalance your allegiance to narratives, and your capital will naturally find its way to safety. This is the study of economic narratives. For more frameworks that decode the stories moving markets, the channel is Economy Decode.